Good morning, everyone, and welcome to the European crossover webinar. And as you can see, we're seeing a quick jump up here in the euro after just a dip. And obviously has a lot to do with this headline. We see here, there was also, it says let me go back to this one right here. Prime Minister Conte worries about the spread and will respond with reforms. This has actually got the euro pushing up here. Deputy Prime Minister Matteo Salvini, speaking with Brussels, rejected Italy's 2019 budget, said on Wednesday the government's fiscal targets were valid, but as I said, and then obviously it was going to start to hurt, or it said it was disrespectful to Italians, the EU sanctions against Rome, but at the same token then, there were some concerns about these spreads and the euro rally because they said they will respond. Euro rises to day's highs as Italy's prime minister says he's worried about government bond spreads and will respond with reforms. Now, we know that the Italian bank stocks were 2-year lows yesterday. We talked about that yesterday also as a potential for the euro to then, pull back. And we said that any gains in the dollar, you'd want to fade those. With the potential for the euro to pull back, and certainly that not fade the dollar, but I'm saying is if we got a rally, let's say on the weaker data, and we got a rally on the euro inversely, that we'd want to fade that because we'd be looking for this pair to be under quite a bit of pressure as it came into today. And we didn't get much of a rally here in the euro yesterday, but we just kept sliding and sliding and sliding. And we came down to our bias chart support here in the euro, which we had. We talked about minor support at 1398, but our bias support was at 1369, and we did make it down there, maybe just a little bit lower. We've also seen cable pair back just a bit. I mean, it's kind of sitting here in that range of nothing, but here's that level right here that we've discussed. So overall doing a bit here, not a whole lot. Dollar yen has come. Remember, from a week ago, we talked about our target being about 1255. We had our bias chart support from the day before, not yesterday, but the day before, 1240. That did, it worked out okay, and we've made this run back up here to 13. Let's see, crude completely fell apart again, which I got stopped out of that CAD position that I had in here. That I didn't think crude was going to turn around and fall completely apart again, which it did. Okay, we even went got a $52 handle on that. We'll move this out of the way. Gold has continued to hold steady overall. This worked out pretty well yesterday. Also, we had 1228, 1227. We kept that as moment. We had that as our bias chart resistance with 1221 as bias chart support, and that worked out pretty good here. You see here's a 1227 there, and then we did pull back, and the 1221 held out overall. Okay, Aussies continued to pair back. We talked about the 72.40. Well, we actually went about the 72 teens before coming back. We're now at 72.45. We said this is the 72.40 is where they're going to start to accumulate, and right there's the 72.40 right there. So we dipped a little bit lower, got as low as 72.03 before coming right back up here to 45. Let's take a look elsewhere. Dollar index, we did get a pretty good little run up here in the dollar index, made it up here to 96.89. We actually had a resistance, I think it was 96.57 here. With that, we'll move into the day's news. Obviously, the big news right now is that Italian Prime Minister worrying about the bond spreads. So probably a headline that you would normally see catch a lot of attention. And I don't mean in general, but I'm saying is the fact that Italian banking stocks were at 2-year lows yesterday morning. Well, and then in light of everything that's going on right now, probably saw a little bit of concern there. We have come back up here to this 20 and started to pare back a bit from there. So it says the Canadian dollar near 5-month lows as oil prices plunge. The Canadian dollar weakened to a near 5-month low on Tuesday against a broadly stronger greenback as oil prices tumbled, and a senior Bank of Canada official made comments that some market players considered dovish. The central bank, the rise in interest rates is resulting in difficult adjustments in the finances of many. Senior Deputy Governor Carolyn Wilkes said in a speech, the central bank has hiked by a total of 125 basis points since July 2017, leaving its benchmark interest rate at a level of 1 3/4. The loonie was pressured by a combination of pretty dovish comments from Wilkins, a stronger U.S. dollar, and low oil prices, said Christian Lawrence of Rabobank. Oil, one of Canada's major exports, was caught in a broader Wall Street sell-off that was fed by rising concerns about slowing global economic growth. The dollar index rallied as a sell-off in world stock markets spurred safe haven bids, and investors worried about slowing global growth. Canadian government bond prices were mixed across the yield curve, with the 2-year down 1 Canadian cent to 2.217. Australian New Zealand dollars sideswiped by stock sell-off and China worries. So obviously, like I said, that's 72.40, but concerns also with this China thing still weighing, pushed this past the 72.40 a decent amount. We're back up 72.43, but obviously those have been concerns. We're seeing the S&P still fairly weak here. The Aussie dollar was down 72.13, having shed 1.1% overnight as investors fled currencies leveraged to commodity prices and growth. The failure at 73.38 early in the week now risked a test of a major support around 71.64. It also sank 9/10 against the yen overnight. The Kiwi was pinned at 67.87 after toppling 0.7% on Tuesday, but found some support around 67.80. Wall Street fell sharply for a second straight session on Tuesday, and strains appeared in U.S. corporate debt and junk bond markets. And to the gloom was a fresh scare over China-U.S. trade, as the White House on Tuesday said Beijing had failed to alter its unfair practices. The report seemed to pour more cold water on hopes of President Trump and Chinese President Xi Jinping would find a truce at the G20 meeting next week. Comments out of the U.S. don't seem to be calming the trade feud, said Rakuten's Securities Chief Operating Officer Nick Tweddale. The Aussie looks to suffer more today in its role as a risk proxy and expect more volatility in the emerging market space. There are some signs that cracks in the U.S. economy are starting to show, mainly in the credit market, and this is adding to all the geopolitical and trade factors that are already causing a concern, he said. Worries about economic outlook in China has also slugged prices for iron ore and coking coal, two of Australia's biggest export earners. The latest safe haven sale overnight saw the global dairy trade price index dropped 3.5%, partly due to expectations of strong supply. And I decided to pull this up because it's been big news, or it's news somewhat for last week. A lot of people talking about it. Bitcoin crashes to its lowest this year, losing 25% in a week. Bitcoin slumped on Tuesday to its lowest this year, tumbling as much as 10% to breach 4,300 and taking losses in the world's best-known digital coin to 25% within a week. Other smaller coins also skidded sharply as broader cryptocurrency sell-off and by traders and market makers to be rooted in heavy selling at leveraged Asian exchanges gathered steam. We've been waiting for a breakout, so Matty Greenspan, senior market analyst at eToro. When you have the price moving so steadily, you've had lots of stop loss orders building up, and now you're seeing them being liquidated. Bitcoin has plummeted over 75% this year from a peak of 20,000 just in December as retail investors piled into one of the largest bubbles in history. Casino mentality, traders and markets blame Bitcoin's slide on heavy selling that leveraged exchanges in Asia, such as Hong Kong-based OKEX and BitMEX. Few exchanges in the West lend Bitcoin to traders, making the Asian venues popular with speculators. The presence of leverage markets makes day traders attracted to Asian markets, says Michael Morrow. Folks who are risking 100 times type of leverage, it's really difficult to think that as an investment. It's a casino mentality. Others blame were last week's hard fork in the Bitcoin Cash, where a software upgrade split the fourth biggest coin into two separate currencies. Cryptocurrency advocates say Bitcoin is still young and price volatility is to be expected. Many predict the need for virtual currencies that operate beyond mainstream banking will outlast any short-term price falls. And the steady sterling, steady as UK's May looks to seal Brexit blueprint. All EU leaders are due to meet on Sunday to rubber stamp the deal consisting of Britain's withdrawal agreement and an outline of the two sides to a new relationship after Britain exits the EU in March. German Chancellor Angela Merkel said she believed a solution would be found by Sunday, despite not knowing how to solve Spanish objections. Brexit negotiations and political uncertainty in Britain remain the dominant drivers for the pound, and many analysts are cautious about its prospects. Speculation that May can renegotiate a withdrawal agreement with Brussels looks misplaced, and instead her trip today is all about writing the non-binding political declaration that will accompany the exit. May faces fierce domestic opposition to a Brexit deal, and the arithmetic is against her in a parliamentary vote. She needs to win to get the agreement to sign off. Still, rebel moves to force a no-confidence vote in her leadership have fizzled, and sterling has pulled away from last week's 27.25, its weakest since late October. And the euro rises on hopes of Italian budget compromise. The euro rose on Wednesday, buoyed by reports that Italy may be open to reviewing its draft budget for 2019, potentially easing a confrontation with the European Union. It's the same thing. Whenever the euro's up here, then they don't care. When the euro gets down here, then they start worrying, and it just kind of goes back and forth. So that's what we were talking about yesterday, about looking to fade this pair going into this meeting. And then all of a sudden, like I said, now the old dark is before the dawn, and then all of a sudden now the Italians are worried, and then that sends a little bit of spike, and we're just kind of back and forth in it. But a report that Italian Deputy Prime Minister Matteo Salvini may be open to reviewing the government's 2019 budget helps to support Italian government bonds and the euro on Wednesday. The newspaper La Stampa said Salvini was ready to reduce the planned spending on a citizen's income and unwinding of previous pension reform. The potential for a further tussle between Rome and Brussels can have an impact on the overall Eurozone economic growth, which will keep the euro under pressure, said Michael McCarthy with CMC Markets. The euro's strength weighed for the dollar index against a basket of currencies. The dollar has been supported by investors seeking out the safe haven currency on mounting concern about global growth and a U.S.-China trade war. With another rout in global equities on Tuesday, the risk-averse traders sought shelter in the dollar, which climbed from a two-week low hit earlier on Tuesday. The dollar has been under pressure this week from comments by Federal Reserve officials expressing concerns about a potential global slowdown. Those comments led some investors to bet rate hike cycle was near its end. The Japanese yen fell 0.15% to trade at 12.86. Despite its safe haven status, the yen's strength has been muted. Analysts suspect this is because Japanese investors have kept the money in U.S. and foreign markets rather than bring it home. The British pound traded up 0.2 at 28.08, after losing 0.5% against the dollar on Tuesday. The pound is expected to trade sideways until the market gets more clarity on progress in the Brexit deal. Italian bond yields tumble on Salvini budget compromise. Yields on Italian government yields fell on Wednesday after reports that Deputy Prime Minister Matteo Salvini may be open to reviewing the 2019 budget. Analysts still expect the European Commission to take disciplinary action over the budget, which it says breaks EU rules, but hopes of a compromise after La Stampa daily Salvini was ready to reduce planned spending on a citizen's income and unwinding of a previous pension reform. Everyone is focusing on Salvini, said Michael Lester, rate strategist at Commerzbank. Italy's bond yields fell up to 16 basis points. The spread remains some 90 basis points wider than the lows around 225 basis points in September. The EC won't back off at this point, said Commerzbank Leicester. They have to take care of their credibility, and we've had similar comments before. It's all past the point when it's just about words. The EC wants action. There's a crunch point coming. We think it's survivable, but there needs to be more price point paying before that point is reached when the BTP reaches 4% and you get a solvency crisis when you start to get the doom loops back again. The Commission will publish its opinion on the drafts on all 19 eurozone members at around 1100 GMT. It's expected to bring the case for an excessive debt procedure against Italy, the first step in a potentially long process. As Italian bond yields fall, Greece bond markets also recover slightly from a heavy sell-off in the previous session. And we'll move on to gold. Gold gains on easing dollar and equities. Gold prices inched up on Wednesday in subdued trade ahead of a U.S. holiday and weakness in dollar. Gold is tracking the dollar movement, said Ronald Leung, chief dealer at Lee Chong Dealers in Hong Kong. And it gained about 7% in the previous session. Investors shun shakier assets in favor of safe haven currencies. And with that, we'll go and move on to the bias chart. Hang on. There we go. So with the euro, we had 1369 as a support, and we did come down here and had a pretty good continuous slide as we came into all these budget woes with Italy again. As the gentleman was saying, I don't think anything's changed, and they feel that there, as the gentleman was saying, it has to be more price paying. Probably so. The only thing is you have to be a little bit cautious is with this Thanksgiving. I think things do slow down, and sometimes you see some pretty wild movements, as I talked about with Thanksgiving. So you have to be careful with that. There's a resistance right there, 14.10 right now. And right there, they made up to 14.18. And that's a good little area right there, too. You can see that right there coming across these touches. It's actually where they stopped too. That was our temporary or minor support yesterday. So that's going to be resistance there. And I think that's right there, this touch. 14.17. And you can see we're starting to slide back down again here in the euro. You probably have a chance to go and slide right back down here to 84 from here. But that'll be the resistance, 14.17. Looking for support now. We'll go right there, 13.43 for support and give it some room. You can see we're starting to still ease back again right now. And it's using that opportunity to just go and sell into that. There'll probably be some short-term support, as I mentioned, around 13.84. But right now they're just using this run up here just to sell into that. Let's go move into cable. Trading in a very, very tight range. Right here, 28.69 will be resistance. And you know the traders will be getting out if they haven't already, leaving on for the Thanksgiving holiday. So really the action is now, and then once we get into the New York session, things may start to quiet down. The only thing is with the euro, like I said, I think we can slide back down. You see right there, 13.85 on a short-term basis, but we can come down to that 13.43. But on a short-term basis, if you took a little short, 13.85 is where you'll market should start to find a little bit of a pop back up for a little bit of short covering, but certainly looks like they want to push lower overall. When we look at the cable support, on a short-term basis right there, 27.47. And let's go move into the Aussie now. We had a support here at 72.40. Well, we said we would look for the markets to come back in and start to defend that area. The whole situation with the China is continuing to go on away, although the Aussie still has fared fairly well in light of that. Still like this area, right? You see right there, all that, I guess even 72.25, but we were looking at that was still a pretty good pullback because that was over 100 pips. So we actually pulled as much as almost 140 pips before they started to find some ground. But that 72.40 that we talked about coming in right there. And actually the market had bounced off of that area here. We got as low as what? 72.32. We're looking for 72.45 before the market came back to rally about almost 30 pips, but 40 pips off, 44 pips off of that area. Then we started pushing down here. Support is going to be just same thing right there, right? Well, not right there with this touch coming in there. So it'll be 72.14. Although I'm not sure if it'll make it there unless we continue to see further pressure. Resistance on a short-term basis is going to be 72.78 for right now. Q has held up very, very strong. Resistance will be right back at this line here, the 68.45. Well, if they want to come back down and we get these concerns with China starting to roil things, it's to 58 they want to come to. We haven't even had very much of a pullback at all. But if they come down test, they'll come down. They'll probably actually come even a little bit lower. If you look here, we've had this pullback. We break here. It doesn't seem like they only pull back just a bit, but we'll go with 67.58. And let's move into the dollar CAD. This got roiled by this continued fall in crude oil. This has just been amazing. Look at that. We've fallen. It's amazing to think about this. From here, we've fallen nearly $24. That's just huge. And even when you saw this pullback here, I thought we'd come back right to here, 59.23, back to here, and we made it to, what was it, 58.09. So still came up $1.25 short of that, and the market tussle. Well, what yanked this down too, obviously the global equity weakness of concern, and the trend was already lower to start with, and it just opened the door for them to push even lower. And that spoiled the party here on the dollar CAD. Looked like I said, this 32.45. I got stopped out for a loss of 53 pips on this. And I had the opportunity. We talked about this. I had the opportunity to go in and take profits here. Some of y'all did here and here. And look how we kept coming back in here. Well, here's where we talked about it. But I'm saying we came back, look, and had dropped the dollars all the way down here into the 50s before coming back, and then that oil just really set this thing off. Looked like everything looked okay. Look here, we get this large wick, and then we come all the way back down. Now this looked pretty bearish. I mean, not real bearish, but I'm saying it certainly didn't look bullish at the time. And look, we just turned and come back with this solid bar. Now we're coming back here, so one heck of a move here. And also, one of the central bank Carolyn Wilkes said that, it's been a big stress, the raise in interest rates, a big stress to families. So now thought is they may not be so quick to hike. And that's one of the things that was kind of working in its favor before. So the whole thing is that they were going to play catch up to the Fed. I'm not so sure it would make this run up here, which is up here to 33.41. But on a short-term basis, that would be it, 33.16 on a short-term basis. I think right now it's going to be in a bit of a holding pattern. Now, after this big run-up, probably knocked a lot of people out, and we're going to have to see what the market wants to do here. I think we're going to be in a bit of a resting pattern for a little bit here. If the market would have to come back here, see how many buyers it can pick up. This is going to be support here, 32.53. There, call it 32.54 on a short-term basis. And resistance on a short-term basis right here at 33.16. I think the market's going to have to come back here and decide what it wants to do. This is a bit reminiscent. It's not the same thing, but I'm saying as far as having to be on a holding pattern, the same way was when the dollar yen got up in here into this 13.89, and we talked about it having to take a pause and decide what it wants to do. It wants to make another move now to higher, which I didn't think it would. I thought it would start to turn lower, which it did. Well, I kind of think that's not the same situation, but after this move here on a very shorter term basis, the market may have to sit a little bit here, unless we saw some dramatic move in oil to pop up, and that doesn't seem likely at this point. Not that oil can't recover a little bit, but certainly would take a pretty big move back up into here to take out these highs for the dollar CAD to recede. So I think we're kind of a little bit of a holding pattern as we back and forth here to see what the market really wants to do at this point. Let's go to the dollar Swissy. This market's had a pretty good pullback. A couple of y'all have taken some good trades on this, and we've seen this thing hang around, finally took the dip. If it pulls back, it's going to be right here, just straight up technicals, 98, 96. Same thing right there. And on the upside, despite the move in the dollar, it's not getting much of a push higher. We did have 99.63. We'll go on and keep the 99.63 on this. So we'll keep it there and just keep it as a range. With that, let's go move into the dollar yen. And we had 12.16. We're looking at this 12.21, thought they might overshoot it. You know, this thing has held up a lot better than what I thought in light of what's the fall we've seen here in equities, which is trying to hold this area here, 26.40. Made it right up here to the 38%. That's where it stopped right here, 13.15. This area in here. If equities were to find a little bit of support here, we'll go right here with this 13.26. We'll call it 27 at the 50%. This is a pretty good move back already. But if we get a little bit of a favorable response in equities, maybe a little bit of short covering, generally you see the market's a little bit more bullish or price, trying to think of the right word, but doing a little bit better as we go into holidays. You may see a little bit of short covering come in, and that may translate into a move here for the dollar yen to take us up to 13.27. You could maybe even potentially come as high as 13.40. I think that 13.40 would offer a great selling opportunity. So just be wary of this, but I think a move to 13.27 is possible. Support here on dollar yen is going to be right there, 12.62. You can see that coming right across. 12.62. And let's go and move into the cash dollar index. We actually had the resistance here at 55, 96.55. They got beyond that. This is interesting. This bar has it all over the place. We'll go right here with resistance 96.83. See that right here coming across? In fact, let's mark that off. Right there. Once again, as we come into the New York session, you'll probably see things start to slow down. The only thing that may generate a little bit of action is obviously the issue with the euro and Italy, but you see we've kind of come back a bit. This is a good opportunity where they sold them back. We pushed back a little bit higher. There's potential move down here at 1385, but if you're looking at where they'll find some support, they sell it off. It's going to be down here at 1343. Support here on the dollar index. At 54 is a little bit too close. And I really don't see the euro turn around and taking off. And it comprises 56% of the cash dollar index. So it has a big, heavy emphasis on that. We'll put it here, which is 96.43, but I'm not even all that crazy about this. It's just, you're going to be hanging around here, but you have to watch out for the moves, chaotic moves you can get on Thanksgiving. And be cautious. Can't stress enough. You get some big moves on Thanksgiving. Not all the time, but you do get some sizable moves. This whole Italian budget situation, that's just right there. Is this like a lighted match next to a couple of gasoline cans. The gasoline cans aren't open, but maybe some fumes are coming, and boy, you get that, and this thing could really shake around backwards and forwards. Probably more likely to the downside, but just be concerned about that. That would be the one thing that could spark something, some of this Italian news, and it's right there. We'll go into gold. We're still looking for a move up here to 1237. We had 1227 yesterday. It's actually played out fairly well. 1227 and 1221. This, I don't say capped it. It did go and tick up a little bit higher, but we came back down and we actually made all the way back down to 21. It's kind of interesting. Look at this quick action here. We jumped up to 29 and a half, even exceeded this 27 here. Look at that. And then we turned around and dipped all the way down to 20, which is just 70 cents below our 1221. But we took out this 61% right here, jumped up, and then turned around and slid right back down. I still think they want to work themselves out eventually. We talked about 1230 as a pause area. Well, we got up as high as 29.5. That's about as close as you can get to 1230. We talked about a pause from 1230, remember? Said 1237. It's part of the Asian analysis coming into the week. I moved to 1237 with a pause at 1230. Well, there it is. 29.50, 50 cents away from the 12.30 and the pause. Well, pretty good pause there. Pause took us down $9. We'll get rid of this. So I thought maybe, hopefully, if the market would get a little bit weaker, we could have come down here to 14, which I think would be a fantastic area to load the boat. But it hasn't played out so far. This is an interesting one. This is a little bit. I'm thinking about what we had the other day when we were here, and I was talking to Andy, and I forgot who else was in the discussion, and I posted a chart. This was at the end of the New York session. I said it just looks like it's scratching the rally. Oh, that was on a Thursday, and then we saw this big rally here. Well, this you see here, it looks like it just, I was hoping we could get a break. We did get our breakdown. Remember, I said at the time when we got this rally, I said the logical target is for them to come back down to 12.19 because I was looking for the market to run out of gas around 23. We popped up. I said logical targets for them to come down 12.19, which is the breakout area. So we did get this in the Sunday session, and then we started working higher. But this market looks like it just wants to go higher. Maybe over Thanksgiving with all this Italian stuff, this might be the one thing that'll push it up here, maybe up to 12.37 if things get a little bit crazy. But it certainly doesn't look like it wants to go down at this point. Not saying it won't, but I'm just saying at this point, it looks like it just wants to hang on. It just doesn't want to seem to push lower, even when the dollar was a bit strong. Obviously, we did pull back, but it's holding up really well. It's not testing this 19. It's not giving anybody the opportunity to get back in on any long positions. So, with some of this Italian news, we could just see this thing just really jump up. So, resistance on a short-term basis, well, it's going to work like a pivot. It's going to be right there. We'll call it the 1227 again. But in this case, 1227 is going to work like a pivot. It gets beyond that, we certainly start to move. Don't really expect necessarily that we'll see that today. We could, but I think that it's something that could materialize tomorrow with this whole Italian situation. Support, well, we'll call it 1220. 1220, so just move it $1 lower. Bonds, we had 40.15 and 39.15. We're almost at that support. Actually, we got to the tick, 39.15. We'll see if that ends up holding. They could pare back some because, look, once again, we're thinking that we could see a little bit of a short covering here in equities, some holiday buying, that type of thing. Not that I think everybody necessarily wants to buy it. It's just I think we may just see some additional short covering to take us maybe into the 2680-ish area here. That may allow the bonds to go and pull back. So we'll go with 39.06 if that takes place. Resistance on the bonds right there, 39.26. Let's go to the bunds. The 6104, that capped it. That was a key. Remember, we just went with the straight up technicals on that. And that capped it right to the tick. Resistance. Italy's talking their own little reconciliation. It's all a bunch of BS, if you ever understand that country. 60.89. And support, well, I don't see them coming off too much. They're going to have to get some really good news for support, but we'll go right there with the technicals. 60-40. And on to the DAX. This thing has been under some kind of pressure. Right there. Let's see here. Once again, I think that things will respond a little bit better, but and this would be right there, right here, but I don't really want to trust it for that. So let's see here. We'll just go with 11,098. And let's see here on the upside. There's going to be, if things get cooking a bit, I don't think it'll get cooking that much though, but the risk would be 12,228. Right here. I don't even want to give it too much room unless we just get some just general short covering. Yeah, let's just go with 11,226. And that concludes it right there. So we're able to get off onto Thanksgiving, and that's the bias chart. Be aware of the Italian news. Things are going to be slowing as we get into the New York session. You can see the euro come back up a little bit here. They use this opportunity here to sell into it. I don't see anything that's going to come out that positive. The risk there is going to be what happens with Italian news headlines. And potential, I think the more interesting story here is going to be gold over the next couple of days. With that, good luck to everyone and happy Thanksgiving. And thanks for joining us here on the European Crossover.